From Bloomberg World Headquarters in New York City, this is Evening Edition on Bloomberg.
The next guest says, not a better time to invest than now. Drew Kanaly, chairman of Kanaly Trust Company, standing by live for us in Houston. Drew, we've had these conversations on camera and off camera, and the eco data right now, housing notwithstanding, it seems very strong to most people, and the housing part of it, you and I were discussing before as well, you think that there really has been exaggerated. Talk to me about that.
Well, it's just not that big a portion of the economy. I mean, if it's a $14 trillion economy, housing's maybe $1 billion, $1.7 billion. It's just not a big enough component to bring the whole house, as it were, down. And, you know, this being Halloween, we just seem to be seeing monsters under the bed and the boogeyman coming out of the closet in the form of subprime loans, and that still hasn't gotten us. And so at some point they're going to look at the data and realize that some of their fears don't equal what the data is really telling them.
And the other thing that you point out, as I take a look through some of the research here, is that the lenders are not powerless. They can reset or not reset loans at their own discretion in many cases.
Yeah, there's still something out there called forbearance, where the lenders don't have to reset. These loans don't have to go up to the highest rate possible. And with the Fed cutting rates today, the window they have to operate in to reset these loans is far more favorable than it was. But Mike, we still have to go back to what got us here in the first place. We built too many houses. It's an inventory problem. That inventory needs to get repriced. It needs to be cleared out. And then once you know what those houses are worth, then you know what the underlying collateral is, and then the bid returns to the subprime loan packages.
All right. In the meantime, you're still very much into the whole global theme that we've discussed in the past, right?
Right. I mean, what's pulling this wagon is this emerging markets, China, India, Russia, whichever one you want to identify. They're the marginal user of all the commodities. That's what's driving the price of oil. That's what's driving our exports. And all of those themes are still in place, and we should still be investing in those sectors.
Talk to me about the sectors that you really like right now. What seems to you to be the logical place to be, or places to be?
Well, here domestically, anything industrial related, energy or technology, all those are benefiting from the weaker dollar expressed in exports. And by the way, in that GDP number, the consumer was still very strong and they were out spending. So there's reason for optimism all over the front. We just keep focusing on one sector, and that's not the one that's going to affect us.
We were also talking before we came on the air about the oil prices right now, where they are, you know, another record set today as well. The consumer seems to be digesting that and moving along pretty well. So what do you make of, ultimately, does it, people saying it's only inevitable we're going to hit 100. Does the economy have a tipping point in terms of those oil prices, Drew?
Not so long as productivity moves ahead. Remember, we've gone from roughly $30 a barrel back in 2003 up to 70-something last year, and then on up to perhaps 100 this year. So if from 30 to 70 didn't get us, then from 70 to 100 isn't going to be the big number either. It's still a question of people believing that productivity can fill that space and avoid inflation.
All right, in this environment, Drew, what about asset allocation, bonds versus stocks? What do you think is the wise place, the wise proportion to have right now?
Well, if you're a balanced investor, let's just say you have a habit of investing half your money in stocks and half your money in bonds, it's probably still wise to carry a little overweight in stocks right now. So the typical portfolio for us that has that type of allocation, we're letting it move up to about 60% in stocks right now.
And I would ask you, if there's anything out there that's bugging you, that's keeping you up at night, what would it be?
Well, it's probably some of the fears that tend to give the market the gyrations that's difficult to invest in, which just don't exist, which is this subprime credit crisis, which is just non-existent. And so that keeps me up at night. The only other thing that we're looking at is some of the valuations. Let's just take China, for example. It's starting to get on the high end. If you look at the Shanghai index, it's about 67 times earnings.
Gotcha.
So, you need to be careful.
Okay. Well, with that in mind, we'll leave it there for now. Always a pleasure, Drew. Thanks very much. That's Drew Kanaly for us at Kanaly Trust Company in Houston. We'll